Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the very earliest. In this video, we talk about a stock idea with very strong fundamentals. Now this stock was trading at more than rupees 200 just a few weeks back, and in this market fall, this stock has also savagely corrected. The company is an auto ancillary company and the sector is expected to do well going forward. Please watch this video to know more. Now the company in question is Gabriel India Limited, which is available at 137.70, and the target price here has been kept at 188. Now when this report was initially published by a major financial portal, the price was 137.80. The symbol for it is GABRIEL. Now Gabriel India Limited is engaged in the manufacturing and marketing of ride control products. The company's portfolio includes a range of ride control products which consist of shock absorbers, struts and front forks for every automotive segment. It operates through auto components and parts business segment. Its business units include commercial vehicles and railways, two-wheelers and three-wheelers, passenger cars and aftermarket. Now the one-year chart would reveal that this company was on a strong uptrend till the time this correction began, and since then it has commenced on a downward trend. The market cap of the company is 1977.98 crores, which means that the company is still a small cap one. The EPS is 6.31, translating into a price to earnings ratio of 21.82. Now this is largely in line with the industry PE. The book value is 31.36, translating into a price to book ratio of 4.39. The promoter holding here is decent at 53.99. Dividend yield percent is 0.94. The 52-week high is 222.50, whereas the 52-week low is 120.15. Now this research was carried out by the Hindu Businessline, and we'll be providing the link to this report in the description section below. Hindu Businessline writes that they believe that Gabriel India Limited will continue to gain share of business from its key customers, as most of its key customers are outperforming the industry. Aftermarket and exports are expected to recover after a slowdown, and they are very positive on the growth and profitability prospects of the company. They also highlight a few risks like increase in raw material costs, unfavorable currency movements, and a slowdown in the automobile industry, and also a slowdown in export markets. Now friends, please don't consider this to be a stock recommendation. Please go ahead and do your own research. And this is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.